And hey everyone, Brian Bogner along with Greg Towner here with the Parallel Portfolios 5 charts in 5 minutes November edition. We, of course, had an election recently. Whether your person won or didn't win, we're not here to discuss that. We're here to discuss the markets and the economy and what is actually driving these things here. So let's go ahead and get started. Greg, since the election, again, the market obviously, whether it was the results or whatever, I think there was a lot more involved, but the market continues to stay in this uptrend. Talk to us about it.
Yeah, absolutely. Definitely a healthy uptrend for the market continues, and you can see in the far right there, right after the market, of course, we surged higher. Similar as the last two presidential elections, and market liked clarity. Regardless, like you said, of who won, it just said, okay, we know who won, we can move forward. I do think there was some excitement around some of the potential policies that are being talked
Right,
about. And then the
right.
market kind of corrected a little bit as well. And there was maybe some pushback on, well, maybe some of the other things aren't positive. But again, like we said, a lot of that's just kind of noise. That the bigger factor is that the market remains in this healthy
Right.
uptrend for the moment.
Yep.
That doesn't mean we don't have some concerns, though. These next
Okay.
couple slides are going to address those. We talk a lot about sentiment and behavior. Along with that market rally, we saw a lot of money flowing into equities, into stocks, huge surge in fund flows. And that's by itself not necessarily, a negative, but it does kind of grab our attention with sentiment. I know anecdotally, both of us have talked to others in the industry as well as retail investors, and people were really, really bullish, talking about, oh, maybe there's going to be a melt up in stocks. Heard that mentioned a few times. So,
Right.
kind of piques our little concern around sentiment.
Yeah, because again, what we want is we want what we prefer buying into a market that everybody is saying, oh, they don't believe in or trust in or things like that. That usually when the sentiment is negative and we start to see positive price movement, that tends to take place over a longer period of time. Whereas when everybody's jumping in, it does give us some caution. What do we got here with the 10-year note?
Yeah, interest rates, a lot of times when people, talk about what worries them about the market, it's a lot of, news headlines or political stuff. For us, when we talk about what worries us, it's sentiment and maybe something like this, interest rates.
Hmm.
Rates have been moving up, pretty quickly here in the last couple months or so. We've shown charts how it potentially is tied to the rise in the economy. If so, that's okay as long as they don't get too high. Some people are concerned maybe the rates are kind of foreshadowing a second wave of inflation next year. Hard to say, but we do want rates to not get too carried away to the upside
Right.
because it tends to be a headwind for stocks. So definitely something we're keeping an eye on there.
Yeah. All right, well, let's talk. There's been a lot of talk about the government debt situation. Let's talk a little bit about consumer debt and how it's feeding into all this.
Yeah, and I think this is really important because as we know, the consumer, US consumer really likes to spend, number one. And
Hmm.
number two, it's a huge part of our nation's economy. So let's start with the negative here, that the blue bars are the absolute debt balance level for consumers over time. So you can see it continues to go higher, which isn't too surprising as the population grows, as people's, wealth in general grows, they can possibly afford to hold more debt. So negative, but not too alarming. But what we like here is actually the red line, which factors in the debt to income ratio. So as it's declining, they have a better proportion for the two. So we see it's really been declining for really since the peak of the great financial crisis and has done so now, past the pandemic as well. So kind of a mixed picture on debt here, but we think it's reasonably well positioned for the consumers. And I think this helps back it up. A lot of people feel the pain of inflation. I mean, that yellow line is inflation, that spike that we had a couple of years ago. I mean, as we've said, Brian, that's not going away. Prices aren't going to magically reverse unless, unfortunately, there's a recession or some sort of really deflationary event. That's how you're going to get prices down, and we don't want that kind of scenario. But what has been happening here for the last 18 months is the green line wage gains, average wage gains have been increasing at a faster rate than inflation. I know a lot of people may not feel that or may not recognize it because you always feel the pain worse
Right.
than you feel the reward in anything, right? So even though you might be making more money on average, then the prices are still going up. You tend to ignore that because of that and because of the spike a couple of years ago.
And over time, as long as this gap remains, right, as long as income is rising faster than inflation, then the pain of this will start to subside because our income will continue to go higher. But again, if you have this idea that you want this erased and let's get back to the prices pre-pandemic, then we're going to need a recession or
Yeah.
something or like that that's not going to be good for the economy. So as long as this stays there, it's very healthy. So yeah, so we're just continuing an uptrend that we've been in a while. We got a post-election pop, but we actually had one. We've had one every election, and I agree with you, Greg. I think it was more of the fact that we got some certainty. We know who the winner is. We can adjust and move on. And also, so that's the good news. We do have some concerns with sentiment, rising yields. Is inflation still going to stay where it is, or could it rear its ugly head? We don't know yet. But the good news is the consumer is still well positioned right now. So as always, if you have any questions, thoughts, or comments, you know where to find us. Thanks so much for listening, and we'll be back in touch with you again here in a couple weeks.